Hello, hello, hello. How ya? How's your mum? Hey, we got ECB today. Weird, all the lighting is weird. We got ECB today. So I recommend that we watch that together. We have the swing trading group later today as well. You know what I'm talking about? Wow, the lighting's really strange. Huh. Not sure why. Can you guys confirm that you have sound? Can you confirm? Confirm something? Hello? Hello? My charts are... I had to reboot as well. All right, good. Loud and clear. Thank you. Yeah, well, good. So, good to have you here. It's going to be an exciting day. Limit down's always interesting. Let's go. Say something, I'm giving up. All right. Let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hello, my name is Wayne McDonald. Nice to meet you. Welcome to Forex.Today. Would you please do me the favor of clicking on like and subscribing and leaving comments on the videos, because that tells YouTube, hey YouTube, this is quality content. That would really help support the community. I'd appreciate that. Also, Trader's Way is our sponsor. If you're looking for a broker that has fast execution speed, low spreads, great swaps, world-class customer service, and someone that is investing into your success today, then develop a relationship with them, huh? Give them the opportunity to earn your loyalty and respect if they haven't already. Please visit tradersway.com, open up a demo account, and start the relationship. When you've developed the skills and confidence that you need to trade real money, when you get to that point, maybe you'll choose Trader's Way as your prime broker. Please, please, please consider that. So today we got the ECB, so we'll end up watching that. Just a quick around the world. We had Bitcoin dropping a very significant amount, and it has now. More than I thought, but at least that was our plan. Okay? Thank you, Jimmy. So that was our plan. It seemed ridiculous to say, hey man, we made it almost to 11,000, but it should come down. And boy, look at that. It dropped all the way down to 5,500. So, like, amazing. Just amazing. So, big drop. But technically it should have anyway. So that's really cool. Very big decline too. From here to here, we're looking at, like, let's say this more recent top to the more recent bottom, 786 to the nose, to the penny. So we're at $6,000 right now. Okay, $6,000, just like that. High of 14, now we're at 6. Welcome to my world. Welcome to my world. So there you go, crypto. Okay. Ahmed says, I've tried price action and everything. I keep losing. Well, then you wouldn't be doing price action if you kept losing. So like price action is down, 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 up, up, sell, but not an up and up and up. So you, right? And then down, 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 up, sell, down, 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 up, sell. So I'm not sure what you're doing, but we need to break that apart and figure out what you're doing. Okay? Okay. Anyways, let's go back to this. This is what we did on Friday, or like last week. All these levels were prices you could possibly look to sell. And it hit one of the prices, down, 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 up, kind of double topped or lower high. And then it's been down, 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 down ever since. What we talked about yesterday was we had a 3-day pullback to the 4-hour 21, pullback to the roll reversal, but nonetheless, a 3-day pullback. Right? 3 days. For some, that feels like forever. I want you to realize that most of Wall Street trades higher than a 15-minute chart. Okay? Many professional money managers, not hedge funds, but money managers, adjust their portfolio once or twice a year, right? So they're not even looking at days, right? So to go this huge drop and then give it all back or lose a whole bunch of money just simply waiting for the retracement is not cool, right? But all it did was retrace back to this area. And this is what we talked about yesterday. And then the trend probably will continue. Unless, you know, Russia and OPEC make friends again. But that's probably not likely, right? Does that make sense? I mean, that's what we did talk about yesterday. I'm like, look at this. Roll reversal here. That's not typically how you play it, but someone is playing it. And like, oh, here's the 21 and, you know, all that kind of stuff. So anyways, that's what happened to you. So alchemy, you need to figure that out. Okay. This is part of the symbiotic relationship between bulls and bears. Okay. Okay, getting killed in here, most likely what you're doing is you're trading the smaller time frames exclusively. You're not, you know, there's bigger forces. So I've always recommended you start on the 4-hour, work your way in. Okay. And then also get really, you know, if you're going to be a trend trader, you know, you want it to go up so you can sell it. That's what a trend trader does. They want it to go up to sell it. Okay? So yeah. Okay? All right, well. Then you got it. La 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 la. So yeah, so now what? I guess let's finish that thought. It's not much of a thought because you should have sold it yesterday idea. But there are two issues here. There's some sort of support that lives at 30, probably psychologically. If we had no psychological attachment to all of this, where would it go? Well, if you're using price action, you're just simply following the 21, right? So this trade is just like straight out of my book, right? Back to the 21 sell. So there's that. Price action is assuming a lower low. So what's the bottom? Down. Where would you be challenged? Double bottom and then maybe a target? Like the better way to look at it is if you're bearish, you sell off the resistance, put a stop somewhere. Now you're down here and maybe you've moved your stop and let it run. Where's the bottom? I don't know. Okay? Because this isn't technical. This is OPEC going to war against Russia and indirectly the United States. They are flooding the market with oil on purpose. They're doing it on purpose. This isn't supply and demand equilibria or equilibrium. This is Saudi Arabia doing this. You know, they went to 100% capacity. They turned every valve to open up every pipe, and they have oil in storage that they're dumping on the market. Did you know that? Thank you, RJ. 100% plus inventory. Okay? And they're doing this to punish the Russians. And they're doing this to drive out frackers in the United States. So frackers need, let's say, $45 a barrel. What OPEC is doing is driving it down. These guys are losing money. They shut their wells down, but they owe money to junk bond holders. They're not going to have the cash flow to pay their debt because they're not. You wouldn't pump oil out of the ground if it cost you $45 a barrel. So you are out of business. And then once they default on their junk bonds, they go out of business, and OPEC will be around in 20 years. So, and they already have money, right? So they're like, oh, all right, we take a hit. We have a bad 5 years. Okay. So, I don't know the inevitable target, but play it right. Make sure you're not guessing. Okay? Make sure you're not just buying stuff because it's cheap. These are old bad habits. Okay? These are old bad habits. Make sure you know what you're doing and make sure you're a trend trader. Okay? Okay. Norway, we said this would go up and get crushed on oil. Oh, there you go. So this goes back a couple of weeks ago. I did a presentation on North Sea oil and the history of North Sea oil, and its ties to the White House, the ties to the weaponization of oil in the 1970s, all that kind of stuff. So hopefully you learned something there. And boy, this whole idea was oil's likely to go down. How do you play it? Well, everybody knows CAD, but are you playing Noki? Neat, right? Did anyone follow on the presentation? Did anyone trade from then? I imagine that you remember the presentation. Gotta keep my eyes. We got about half an hour now to Le Garde. Yeah, well, isn't it good that we talked about it 2 or 3 weeks ago, MHB? Okay, good. Nahomi did. Thank you, Nahomi. Okay. Up, down to the 21. Up. Okay. That's what the 21 is for, y'all. Well, the other thing going on here, guys, is that, right, the standard operating procedure, there's two parts to moving average trading. One, you have the crossover. So the idea is it will come back to the 21, and the 21 will act as dynamic support. That's straight out of my book 13 years ago. The other thing out of the book 13 years ago is in this situation, you could always take the next 5/8 cross up, which is here. So you get the 21.55 cross up, and then you take the next 5/8 cross up, because you know to get the 21.55 to cross up, the 5/8 has already crossed up. So it's the next one, which therefore assumes you miss the first wave, it pulls back, and you catch the third wave. By the way, which one is worth more, the wave 1 or wave 3? Or maybe I should change my question. Which is the most valuable waves? 1, 2, 3, 4, or 5? Which one is worth more? Wave 1, wave 2, wave 3, wave 4, or wave 5? It's always wave 3, guys. It's always wave 3. Wave 3 is an expansion. Wave 3 is an expansion wave. Okay? I don't count waves, but when I do count waves, I prefer coronavirus. 1 is this. 2 is this. And 3 is this. Okay. So in essence, I mean, I'm using moving averages, but in essence, I'm assuming I've missed the up because I don't want to be a bull until I have a technically bullish market. Okay. So there it is. Now it's technically bullish. So when do I get in? Well, I need it to fade back. So I need a 5/8 cross down. And then I need the new 5/8 cross up to confirm that the new bullish market is held, and that's the entry. And that's, again, the book sold 13 years ago. I wrote it 14 years ago. This is not new. Another way of looking at it is its price action. Up, down, right? Or it's Elliott wave, or it's moving averages, or maybe there's pivots in here that catch your eye. But you don't have to make it complicated. You just have to pick one methodology that you prefer. Okay, that's all. That's all. See, it's not crazy. We had a bullish engulfing candle. Do you guys remember the analogy I used about the tsunami? I said, even though yesterday the streets were dry and the day before and last week and last month the streets were dry, they're not dry now, and it's a really big fundamental change. And you never jump in and swim against the current. You're just not going to make it. Do you guys remember that? You're not going to make it. This move up, as I discussed, is a huge fundamental change. So jumping in and you're like, oh man, I'm going to swim against it. Whoa, dudes. Stay dry. Okay? Okay. Well, Ryan says, hey man, if you're not in it now, what do you do? Well, let's do normal trading. Up, down, buy. Up. What do we need now before we can buy, Ryan? Remember, I said you shouldn't trade against the fundamentals. So what do we need to do to safely make a new buy? Some sort of down. Or, if you prefer, use moving averages. Or whatever methodology you prefer. It doesn't matter. But the general thing is you're going to have to buy low. And then you ask yourself, well, how low? So, there's your that's a price role reversal. This is a dynamic level of support off the moving averages. You might want to watch pivots and see how it plays pivots. Okay, but you need to pick a methodology. Okay, you need to pick the methodology that you primarily live on and wait for that. If you don't get it, so what? Better than losing money in here. Can you imagine trading in here? Right? You read the EIA report. You read the OPEC report. They're having all these emergency meetings. And you lost money in here? How did you lose money in there? What was going on? Okay? Anyways. Here's what's going on. Right? Here's what's going on. Breakout, pullback, roll reversal, textbook. Right? Textbook. Right? So whatever you use now, do that. So maybe look at it. Okay. You might have to wait 3 days before you get a trade. And then by then, maybe the fundamentals change. Probably not, but they might. Okay. So you got to project out maybe. Maybe do it this way. Project out a little bit. And then drop into a smaller time frame and put it together. It's just a trade plan. Technicals are for sure. Okay. Put it this way. Did you use technical analysis 2 weeks ago? Obviously the answer is yes. Then you do it now. Okay. Technicals confirm and deny the timing and price of what you're doing. So if you want to buy this, then find your price. That's all it is. What price would you buy this at? 10,000? So this is how I did it for oil. Do you guys remember for oil? I said, how about 10,000? And then I said, how about, well, 9,000 is way down here, but anyways, right? 10, and then you pick all these other numbers, right? So let's say you go through this and find all your prices, okay, Ryan? Whatever. Just look at the prices. If it dropped to 10 and then gave you a reversal pattern, would you buy it? If it dropped back down to this, would you buy it? If it dropped down to the 4 hour 21, would you buy it? If it dropped to, you know, and that's all you do. Find those prices and wait. Okay? You have to remind yourself to be the boss. There's no such thing that you, as saying like, I've missed it. No, you didn't. You didn't miss it. You're going to be here for 25 years trading. What do you mean miss it? Okay. Cool. So this is a potential buy if you're a bull. So what would you need to see at that price to buy it? Okay. What would you need here? What would the price action look like if we did reverse here? Well, you'd breach the 21 and then you'd have something like this, right? Like you wouldn't be missing this if you're a bull. It would take 3 weeks probably, right? The $10 billion or 10 billion kroner pension fund. The thing is, the way that pension is designed is there's only certain circumstances and very strict circumstances in which that money can be used. And I believe one of them says you cannot use it just to kind of bail out your economy. But maybe this exogenous shock would be a scenario for the pension fund to be tapped. But Norway has a fantastic financial system. And they were very, very, very smart with their oil money. So if you ever study oil, Norway went out of their way from day one to protect themselves from a resource curse. And they did an amazing job and set up an amazing system. And it's really cool. All right. So anyways, la-di-da-di-da. Let me spend a second here. I want to find the ECB press conference. I thought it was 2%, actually. All right. Saying something, I'm giving up on you. Webcast. Oh, cool. Do-do-do, do-do-do, do-do-do-do-do-do. Dun, 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 dun. That's not right. Did they move the time? They moved the time. They're saying it's an hour from now. That's not right. Yeah, I can't stay that long. Yeah, it's in 15 minutes. You know, whoever set the YouTube thing popped it in the wrong time zone. Time zone changed, right? So it's weird, but I think this is wrong. But even this set at that time seems wrong. But even then, right? It's supposed to be at 8:45 New York time. This is set to 9:30, so it should be started now, basically, right? I don't get it. But this is the ECB YouTube channel. I got there from the ECB website. Right? Watch this. They didn't even pop a new window. I click back. Europa. Europa. Me and you. Da, 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 da. Yeah, even then it should be running right now is what I'm saying. No matter what time zone they set their YouTube channel on, it should still be running right now. So looks like they've, oh, the rate decision. And they're going to wait that. I can't hang around that long, man. I'm too busy today. I can't wait till 9:30 and then start press conference. I don't have that kind of time today. All right, well, I guess we will just wait. Well, I can't come back, Mr. Highvolt. Yeah, no, I can't. I can't work like that. I don't have a brain that can just stop, go do something else, stop, come back. I don't multitask. Right? Yeah, MHB, we already did Bitcoin, but you got to remember, we already had Bitcoin coming down like for the last 3 weeks. We said Bitcoin's coming down hard. We already did all the fundamentals. So like nothing should be very surprising in trading. Now, we knew, let's go back in history and we'll use oil as an example. We knew in January and then later on in February. Let's maybe just focus on February. So, no, well, actually in January, we had a risk-off tone. Okay, now this is oil. We spent most of our time talking more like yens and stock market stuff, but that's generally what our plan was the first day of 2020 to be risk-off. So that happened. Okay, cool. Then we get this coronavirus thing going on, and all of China shuts down. Will that push oil prices up, or will that put prices down? Puts down. Then it made another lower low, right? And now we have an OPEC price war. This has nothing to do with the COVID-19. This has nothing to do with COVID-19. This is a price war. This is literally oil-producing countries battling each other. Saudi Arabia is intentionally uh-oh. Anyways, they are intentionally trying to put the Russians and the Americans out of business. Yes, Luca, we will do swing trading for sure. Remember, you're bringing your trade plans today, right? So you guys are, the swing traders are doing the presentation today. Oh, Reb says, Wayne, during your travels the other day, what was the environment like? Absolutely, completely, 100% normal. The plane was full. The airports were full. The restaurants were full. Right? The Harvard Club was filled with activity. There was meetings. I met with catering because I asked them about rooms where I could do Forex training in the club. And half the rooms I want to look at were actually full with conferences and meetings and get-togethers. And so there you go. That was what it was like. If you had never heard of it, you would never have known there was a difference. So anyways, too many cigars, I guess, huh? So there you go. I do expect Harvard commencement to be canceled this year. Good thing I got 2 degrees. I'm like, I've already gone through commencement. That's all right. You guys want to cancel the second one? But so it was pretty funny. Harvard has canceled all classroom classes. So if you're in Harvard College or Harvard Law School or Harvard Medical School or Harvard Engineering School or the Kennedy School or whatever, all classrooms have been closed. And now every student at Harvard, regardless of the school, has to do their classes online. The March Madness college basketball tournament, the big one, the big tournament, the one that Warren Buffett says if you can predict what happens in the bracket, he'll give you $1 billion. You know that tournament? The whole entire thing will be played with no crowds. Every basketball game in March Madness will be played in empty stadiums. Imagine all the drug dealers. They're going to go out of business. Those are some party times. I'm sure some drug dealers are going to be put out of business. I'm talking the audiences, right? The audiences party like crazy. If you've ever seen some of these games, it's insane. It's such a huge party. So imagine no hotels, no restaurants, all that kind of stuff. No audience. Like there's so many side businesses that are going to be impacted, right? Anthony, it's $1 billion, not $1 million. Anyways. All right. Eurodollar. What do you want to do? What depends. So it's been bearish for several days, which makes sense to me, right? Up, down, down, up, down, down. So bulls, maybe you have your turn today and you look at role reversals. Okay. So we don't know if it'll give you an opportunity, but you'd be looking for this. Screw him, Reb. I'd say, boys, get ready to the real world. When you work in the NBA, if someone tells you you're going to play, you're going to damn well play. Get on the bus, son. Get on the plane. I don't want to play if there's no... Get on the court. Oh, you're saying that the NBA? Yeah. Still. No, but the idea to protest that you won't play an empty stadium. Dude, nobody said you were paid to play in front of a crowd. You're paid to win games. Doesn't matter if there's 1 million people in the stands or 0. Get on the court, give 110%. Okay. So anyways, so that's how you'd be doing this if you were a bull. You'd be watching these prices. So often you'll see that I'll extend these things out, right? I call them reminders. So this playoff 112 could be interesting, right? So let me ask you, if you're a bull, will you buy at or near 112? So that's strategic, right? So we know 112. So now you drop into like a 5-minute chart and you wait. Are we close to 112? Yeah, we're 12 pips away. Good. What will you do on this 5-minute chart? What will you need to see? What will you need to see on a 5-minute chart that will make you buy if you already are interested in buying? See, this is the biggest thing. You already have a plan. You're a bull. It dropped for 3 or 4 days. That's perfect for you as a bull, right? Don't get all caught up like it has to fall today. I asked you, do you think Eurodollar will go up or down? See, Eurodollar went up because the carry trade was dead. Okay? Do you understand? The carry trade died. Europeans brought their money back. Okay? What is going to... Let me really take you to the next level. You ready? Don't even think about the euro. What's going to happen next week with the dollar? Talk to me, Goose. What is going to happen next week to the dollar? If you're still on today, oh my God, seriously? You're still trying to figure out today. What is going to happen next week with the dollar? Okay, now, we are in a point where we used to say cut equals up, right? But that's no longer the case because we've dropped to the point that there's no need. The market is essentially done front running. Okay? Now cut equals 0 carry. Okay? There's just no reason to buy dollar anymore, except global collapse. So we have to, the difficulty here is if you are trying to equate this with, is it COVID-19 that you're playing, or is it apocalypse? Or is it financial? Okay. By financial, I mean, does credit disappear? Do banks fail? Etc., etc. So what I think is going to be said, and it should have been said better last night by Trump, but what it should say is, if this is COVID, in 90 days it'll disappear naturally, and that gives us 300 more days to come up with a cure or something, right? Because it'll die off in the flu season. Okay? If that's all this is, then earnings will be hurt and all that kind of stuff, but the market won't collapse. So what the government should do is say, so Fed says to, let's say Bank of America, they say, look, Bank of America, if you have small and medium-sized businesses, small and medium-sized enterprises that have accounts with you now and loans or credit lines, give them the credit facility they need to last the next 90 to 180 days. So if they already owe you money, give them 6 months without payments. Looks like an announcement's out. Or give them money and whatever. Just find a way to loan them money to get through the next 180 days. And if you do, we will give you the money. So Bank of America, if things get worse and they can't pay you back in 6 to 9 months, then it doesn't hurt you at all because we're giving you the money for free and then you're lending it to them almost for free. You understand? So you have to then play, is this a COVID-19 where this is temporary, like in 3 months you'll be long the stock market again because you're thinking 6 to 9 months in advance, right? Remember, the stock market's about 6 months from now. It's not about today. So if it's zombie apocalypse and banks are failing and stuff, you're going to have to look for different data, and we don't have any data like that at this point. Okay? Okay, so our number was 112. How'd we do? I think it hit 112 exactly, huh? So what are you going to do next? You might have already missed the retracement. Yeah, it retraced to a 3A2 on the first candle. Okay. And if it doesn't come back, guys, wait for the next one. Okay. Now, keep in mind the press conference, she's going to say something. But I don't know. So interest rates have been negative for what, 6 years? They've already done what was it, 6 trillion euros in quantitative easing? Like, what more is the ECB going to do? And what does this have? Why does the central bank have to address a virus? What it needs to address is to make sure those European banks have liquidity and, like I said, have credit facilities that they can borrow from the ECB and the free money and then lend the free money to their small business clients. Okay? But that's just central banking. They would have done it anyways under stress like this. But we'll see. Yeah, favorable for the LTRO and stuff. Fine. But it's not like it doesn't change the world, right? But nor should it. What she's going to say is that she's talked to Germany and France and the Dutch and ignored everybody else, and then they're going to do some sort of coordinated fiscal response. But even that's hard to believe that they were able to pull that off. But she's playing the role, I guess, that Chancellor Merkel used to play, where, she's now becoming the leader of Europe, where she can say, all right, Germany, let's sit down with the French, let's sit down with the Dutch, and let's figure this out. We need to do something, right? So hopefully they have a fiscal response, because that's what's needed. So next week, the Fed's going to cut interest rates, and maybe this US dollar weakens even more. Okay? They're trying to do, but pure mathematics, they were very, very, very late in the games. So they really screwed up the whole financial crisis in the beginning. The whole European point of view of economics wasn't appropriate in this situation. German austerity was stupid and so on and so forth, right? And they were very late in the game. And that caused the European crisis. That caused Greece and Ireland and Spain to then all collapse. And then once again, they were very late in the game. It went on way too long. And here we are, 10 years later, and many European banks are still not as good as they should be. And many of the European economies are still not as fiscally sound as they should be. And, you had Europe in absolute crisis, and the ECB, would come out and say, well, we've decided to do less, and we'll do it for longer periods of time. And I remember laughing, like, what do you mean less for longer? Like, it just didn't make sense. So I know they're trying, and the point is, I don't know what else they can do now, but they are being punished for being really, really late. And a lot of it wasn't even their fault. So again, the Germans getting in the way of a lot of things. They're like, no, we have a financial crisis, so I think we should, cut back everything. And raise taxes. You're like, wow, really? Wow. And then the Americans are also funny. They cut taxes and increase spending during the bad times, which is actually what you're supposed to do. That's what Keynes believed. But then when times are good, they cut taxes again and spend more. So that's also bad. So I'm not saying America's got it figured out, but the beauty of the American culture is when they realize something is wrong, no matter how bitter the medicine tastes, they take it. And they take it fast. Okay? So I think Trump said something about they're making $50 billion available for banks to lend to small businesses. Okay, that sounds like a lot, right? Did you know since the beginning of this year, since the beginning of 2020. JP Morgan, one bank, since the beginning of this year, has lent $28 billion to small and medium-sized businesses. So you're like, oh, I guess that's like JP Morgan and Bank of America. Like, it's like, funny, huh? But anyways. So let me simplify things, guys. You either think this is going up or you think this is going down. I don't care what, but you make your decision. Okay? Bears, okay, have hit their line. Bulls had their line. Okay? Don't get lost. Peter says new world reserve currency. No way. No. Euro has been... the European model has been exposed to its weaknesses too much. So there's no way euro is going to be a reserve currency. If you asked me 15 years ago or something, or 10 years ago maybe, oh, not even 10 years. Well, if you'd asked me 10 years ago, I probably would have agreed with you. Okay. And my speech back then is that the Europeans will look at everything good that America has done and then tweak every sort of flaw or thing that isn't really sort of a European cultural thing. So they'll tweak it and make it better, and Eurozone will be better. It'll be the next new... I think I called it, the United States of Europe, I think I called it. But that's after the whole Greece and Spain and, pigs, I guess, right? Portugal, Ireland, Italy. After all of that, people are like, oh my God, this is not a reserve currency. Too bad, so sad. And that was that. Okay. Now, I don't remember who, but someone was emailing me several times that I should be all over this XRP on the way up. So it's dropped by 50%. I thought 17 was the big number. It looks like it was. So we're below 17 now. Oh, you meant XRP is the new reserve currency. Really? Not today. If you're right, Peter, it's probably not today. Not today. Someday, maybe. Someday. But it looks like you could have bought it at 14 and a half, huh? So at 15. 15 cents, guys. You can be all over XRP. So, anyways, I'm glad I didn't buy it at 35. Yeah. All right. Yeah. Take a quick look around the world. Let's just do Swissy pairs. Let's do Swissy pairs. All right. Swissy, 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 can't you see? Yeah, well then buy it at 15. You'd be the only buyer on the planet. You should buy it all. All right. This is the one. This is the one. So I can move my stops again. This one will be 530 pips. I'll move it 525. Or can I just leave it at 500? Let's see. Where's 500? All right. I'm going to lock that in. 500 pips. I don't need the other 30 pips. So that's 500 pips. And I'll move this one to 550 pips. Cool. So I have I have now over 1,000 pips locked in, worst case scenario. Yay, me! Woo, me! Yay, me! Oh, that's been so much work too, huh? Every day not do everything. Every day not do anything. So that's cool. So that's more risk off. Money still flowing to Switzerland. Yeah, I think there's still some more downside before we pull this together. Heath, I would not say that. You should be crushing it, Heath. Don't even say things like that. You're setting yourself up for how do you say it? Let me try to say it in a positive way. One of the most important things to do as a trader is maintain confidence. It's very, very important that you have confidence. So saying something like what you just typed in is very, very, very bad for your psyche. But impossible, absolutely, ridiculously not. No way is it impossible. Okay? So again, all we're doing is riding the 21. That's all we're doing. So you can't call that impossible. Sell at the 21, right? Down, 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 up, up. Sell at the 21, right? Down, yeah, dropped 1 million pips. Yeah, over a weekend. Yeah, gap like crazy. Yeah, happens, dude. Came back to the 21 and sell it. It's like, just use technical analysis. Sell at the 21, sell at the 21, sell at the 21, and guess what? In 2 weeks, you'll probably sell it at the 21 again. Not impossible. It takes patience and discipline, but certainly not impossible. In fact, completely possible. Completely, totally possible. Okay? Right? Like these are day trades. You can see even the day trades are here. Okay? So like for the day trading crew, right? Up in Asia, down in London, up in Asia, down in London. I mean, this is just pure day trading. Right? Maybe it's easier to see on a 1 hour chart, but let's do it this way, right? Up in Asia, down in London. Up in Asia. Well, it took a while, but anyways, then it eventually came down. But you want to up, you want to sell in here. You sold it, and it took you a whole half a day, and now you're killing it, right? So you had to do your job, sell it probably in here, wait a whole 18 hours, and wake up, and you're hugely profitable, right? So this is just day trading. Which reminds me, the swing trading group meets at 11 a.m. today. New York time did change last week, so make sure you know what time it is. Ask Google when 11 a.m. New York time is. But that's when we do our swing trading group. And swing trading group still gets the day trading course for free. I don't know how long that's going to last, though, but it's there. Same thing with CAD, huge drop, okay, and we're waiting for the 21 to kick in. Okay, you see that? Just waiting for the 21. And this is how it often happens too. You get this big drop, and you wait for the 21 to catch up, right? And it just squeezes, 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 pop, okay? And some currencies do this more than others. Okay. Some do this bit more, right? Bigger pullbacks. This is sort of like down, sideways. Okay. That's why I call them step ups and step downs. Yeah, Javier, right. Just go to every major central bank website and look at their balance of trade. Okay. Probably take you, you spend 3 hours of research and you're going to be set for the next 3-4 months. Okay. Okay. Well, but then again, Luca, I would challenge, or I'd like, by challenge I mean I'd like to discuss that idea of like weirdness. There's no weirdness. So here's a plan that I set up for you guys 2 weeks ago. Let it come up, sell it. It's a Fibonacci, right? There's nothing weird about that. Okay. Right? Down, 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 up, up, sell, down, 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 up, sell. It's not that weird. Remember, if it's weird, you're not supposed to be trading it. There's another way of looking at it, right? If you're finding a market isn't behaving, so like let's look at all euro, okay? If you find a market doing something that you think is weird, it kind of breaks the rule number one, right? Does the market confirm or deny your bias? And you're like, wow, this certainly doesn't confirm my bias. So what's step two? Do nothing. Right? So this is Euro ZAR, Euro Kiwi, all kind of weird things. Euro Swissy, yeah. So these are not even set on proper euro, but let me just change this then. None of this is meaningful. All right. Let's do like Euro Pound, Euro Aussie, Eurodollar. I don't know, what, Euro CAD maybe? Oh, I can't even fit that on there. Don't let me grab the window. Hello. There we go. Gee whiz. And Euro CAD. Euro Swissy, Euro CAD, I guess. All right, let's work this out. See what we got. Okay. So last week, this went from the swing buy zone and hit our weekly target. Overlapped, we call this an Arctic turtle to grab that here. So we had this up, 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 down, down, buy, up, 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 up. So that's for Euro Pound. That seems to make sense. ECB's cut rates and Europe hasn't. So that's interesting, right? And we're at a place where you should probably be better off taking profit. Then OG, you need to stop trading for a while, and we need to figure that out. Okay. We need to figure out why. You need to start figuring out why. Because all I preach is planning. I teach bias. I teach price action. Right? And I teach pivots, I guess you could argue. And maybe moving averages. You can throw that in there. I spend very little time these days on oscillators, right? So there's nothing wrong with any of that. You know what I mean? None of that is a losing notion. Like, oh my God, Wayne taught me bias and now I lose money. No, that makes no sense, right? So what we need to do is figure out what's going on, right? No, nobody's responsible for your losses than you. No one is making you lose money. So you got to come to terms with that too. Okay? So let's look at one thing. Let's just pick something. Let's pick like Aussie yen. What did we talk about in October? Okay, go all the way back to October mentally. And what did I say about yen pairs that would start to happen on the 1st of January? So our conversation's in October. But what did I say about January 1st? Let's just go back to the general idea. Okay? Let's just go back in time. Move away from the coronavirus. January would open down. It would drop for 3 weeks. Then there will be a false rally. And after that, probably continue down until April 1st. April 1st being the new fiscal year in Japanese businesses. How many people remember that? I'm going to get rid of the pivots here. How many people can confirm that? Okay. 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 January 1st is here and here. Okay. So it was down for 3 weeks. Oops, that's supposed to be a marker. Down for 3 weeks, false rally. Okay. And now we're in the middle of March. Hey, Velvert, you got something to say, buddy? So one of the things I want you to kind of remember is like, this is bias. Okay? This is bias. Now, this bigger move down here is virus related. But one of those that, you know, you're trading on a trend. Oh. That's really interesting. Oh, I'm a scammer. Okay. So the issue here is not being right. The issue is I'm trying to remind you of your bias because I worry that the higher volatility in the market makes you jump around. You know what I mean? That's all I'm trying to say. Did you throw your bias out the window? Another thing to ask is if you were risk on, when did you learn that the bias isn't appropriate? So for example, like one of the things we talk about is you confirm your bias and then confirm your market conditions, right? So it'd be like, it's kind of impossible to be a bull down here. Would you agree? Michael, I'm not really a buyer until the third week of August. But this year, the third week of August is not likely to work. So I would categorize myself as sort of down to sideways, and then maybe at the very end of the year up. But I think somewhere in the 30 to 90 day point, probably in the next 30 days, maybe closer to 60, but somewhere in this period here, we'll realize that the worst of COVID-19 has come and gone. We've made it through the storm, and that there'll be a buying period. There'll be sort of a comeback kid rally, of which is hard for me to determine and measure because it's very emotional. It's not necessarily technical. Do you understand that? Like, this is an avalanche right now, but I think smart money will buy back. But not until the worst has been declared. And remember, the stock market is 6 months ahead. Plus, people buying a stock they want to hold for 20 years and they buy it for 30% cheaper. Their time horizon is a lot more than most of you here in this room, right? Like, you're losing because a market doesn't behave over the course of 3 days. And some people might buy, Microsoft stock or Google stock, and they're just buying it because they got a discount because this virus has really brought the stock market down. Great. They buy it and they have no intention to ever get up. And so their timing is much different. And I can see that happening. And that's why they say there's a difference between the economy and the market. Okay? So I think what you'll see is the economy will still be a question mark, but the market will go because they're betting on the economy being better in 6 months. Okay? I don't think we're ready to do that today. I think we need some more blood in the street. But there will be a time when the market takes off before the economy. And now timing that with cycles, so like, will that happen in June? I don't think so. That seems to be early, but maybe by June things are better. Like this June might be it actually. July is not a good time to rally the market. And then when we roll into September this year, usually I'm already long and strong in September, but not on election years. Okay? So this year will not be like last year. So we got to be, cognizant of these changes. But right now, if you were a bear at the beginning of the year on January 1st, you got what you wanted and it's continued. Okay? And it will continue to continue until it stops continuing. And you should be cognizant of that. At one point, it'll do this. Stop selling. The same way as maybe a bull bought here, maybe a bull bought here. Well, actually, we were bulls, if you remember all this. We were a bull here. Here, I said, get ready to sell. These are all factual, right? Here's the third week of August. I said, get ready to buy. Here's October. Buy the dip. Here's the next one. Keep buying until what? That period between Thanksgiving and Christmas. I cashed out here. You guys remember that? And I said, between now and January 1st, I'm going to sell. Do you guys remember that? I'm like, and I'm going to sell, like, for sure. Like, on the first day, you might be late. Like, I'm going to sell the first day. And this 3-week period seemed like forever. Do you remember that? Where you're like, oh, dude, you got out early, dude. I'm like, I don't need the other 100 pips. I got all this. The other 100 pips, I would have to accept risk, and that makes those pips undesirable. But I did say, get ready to sell, get ready to sell. Then there'll be a false rally, right? So in this case, you could have been a bull here. You could have been a bull here. You could have been a bull here. Now, you could have been a bull here, and you could have been a bull here, right? Now, this is dangerous for bulls, right? Because you're buying a lower low. Got to have questions about that. Now, what about buying here? Once again, dude, seriously. Do you remember that whole part about confirm the market? The market here is technically bearish. There should be no bulls. 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 The number one rule is have a bias, and the first thing you do is confirm the market. Right? The swing trading group gets a tool that puts this checklist right here so they can check it off. What's my bias? I'm a bull. Can I confirm the market is bullish too? No, I cannot. Then stop trading. Done. Niet. Okay? So here bulls are killing it. Here they shouldn't be. Okay? So stay bearish until it stops being bearish. So this trade only took a week or two ago. I moved my stop to break even. Now I can lock in what? I'm up 550, 580 pips. So I'll lock in some money here. See, that's too much. So I'm going to lock in that's 250 pips right now. Okay. Okay. I'm a bear. Selling. I need you to get there. I need you to get there. Have a bias, but that doesn't mean just buy on the way down. I've never once said that. Is that right, Sophie? Right on. Wasn't sure. You understand? Right? I need you guys to get there. You have to have a bigger view. All right, so that's that. So this is more, I'm trying to reconfirm the trader you want to be. Do you remember that speech I gave where I said I want you to think of yourself as the trader you want to become 10 years from now? It's very important that you maintain your psyche during these times. Don't slip into the degenerate gambler. And by the way, it's pretty easy to do it. Okay? And that usually comes from this fear of missing out. The market's moving and you're not participating. But you should be focusing on tomorrow's trade plan. If you feel like you're missing something today, like, oh my God, the ECB did something. If you feel that way, then start planning tomorrow's trade. Don't ever plan today's trade today. Okay? Don't do that. That's amateur. Plan tomorrow's trade today. Yeah. Yeah, well, we got to get away from that, right, Mr. Highvolt? We got to get away from that. So think about it and actually write it down. Some people work really well this way. Not everyone, but some people do. Think about the situation and think about how you feel when you feel like you're missing out. And try to convince yourself or if you already know, write down like why you believe trading with the fear of missing out is bad. Okay, so you document everything and then document the way that you do want to behave. And so that you know what to do the next time you feel like chasing price because you fear like you're missing it. And write down those rules of engagement. Things like, okay, you want to keep yourself busy. Great. Let's plan tomorrow's trade. Right? Right? Let's plan tomorrow's trade. That's what you tell the old you with the fear of missing out, and you become the new you. Okay? I'm tricking myself into trades. Yeah. When I can't confirm on a one time frame. Yeah. Well, that's why we start on the 4 hour and 1 hour, right? So like here's how interesting this is. This is a 4 hour chart. The next time you're allowed to sell, there's two scenarios. One, this moving average, you're allowed to consider that. The next one is a role reversal area. Okay? So the only thing you can do is one or the other. And usually it ends up being both. Okay? It ends up being the same thing. So now on a 15-minute chart, now you know the only way you can trade this is a scenario that looks like this. Well, that's not going to happen for like 4 hours, maybe 12 hours. You understand? Like people that are just entering trades now are in this here and they don't know what they're doing. And it's not going to work out the way they were planning or hoping. I don't think there's a plan there. I don't think it's going to work out well for them. Okay. Now there's smaller moves in here too. Okay. So you get like, they might be trading this. Okay. And you might be able to do that okay. It will still do this at some point. Okay. So my fear is you're trading the pink line only. And the problem is when you're trading just pure price action doesn't tell you the bottom before you hit it. Okay? That's the other problem, okay? That's why you need pivot points and stuff. So there's a little more to it. But remember, the general trading is that you're doing this first so that, like, put it this way. Using this methodology I'm trying to explain, you'd be trading this first. That's your first sell. Then this is your second sell, your third sell, your fourth sell. And now you're probably taking profit, like you were taking profit here. Okay? Or like you were taking profit here. Most people do kind of the right thing, but at the wrong time. You're trying to fit your schedule into the market schedule. And the market doesn't give a damn about you or your schedule. That's what I found out anyways. So anyways. I got to go. If you're a swing trader, I'll see you at swing.fxbootcamp.com in about 90 minutes. If you'd like to join the swing trading group, visit swing.fxbootcamp.com and insert a credit card. It's not as much as you think, and you'll get the day trading course and the swing trading course and something like 40 hours of videos and our weekly meetings. So, peace on earth. May the pips be with you. May your profits be above average. And I will see you guys later, either later today or tomorrow. Thanks, y'all. All y'all.